The real estate market is breaking all the rules right now. Inventory is up, but so are contract cancellations. Rents are falling in some cities, but spiking in others. And millions of homeowners are basically trapped in place, unwilling to sell. But here's the weirdest part. Even as demand cools, prices in many markets are still rising. So what's really going on? If you're an investor or you're just trying to buy your first home, you need to understand these strange signals before you make your next move. Because what's happening beneath the surface could create one of the best buying opportunities we've seen in years, or one of the biggest traps. So what's going on exactly? Well, for the first time in years, buyers actually have leverage. There are nearly 500,000 more sellers than buyers in today's market, and many sellers haven't gotten the memo. According to Redfin.com, inventory is up 12% year over year. New listings are rising. Homes are sitting longer. But what about the buyers? They're not in a rush to buy. Pending sales are down nearly 2%, and a record high 14% of contracts are getting canceled. So why aren't homes flying off the market anymore? It comes down to affordability. Average mortgage payment in May of 2025 hit $2,860, just $25 shy of the all-time high. That's because home prices are still creeping up, and mortgage rates are stuck around 6.86%. Sellers are holding out for yesterday's bidding wars, but buyers are doing the math, and for most of them, it doesn't add up. Now here's where it gets really strange. We actually have more listings, but not enough movement. And the reason is what economists call the rate lock-in effect. Over 60% of homeowners have a mortgage under 4%. That includes millions who refinanced in 2020 and 2021. They're locked into ultra-low payments, and they're not giving that up for a 7% interest rate on their next home. That's why even though the inventory is up, listings are sticky. People aren't downsizing, they're not upgrading, they're just staying put. According to Realtor.com, 63% of buyers want a sub 5% interest rate. Only 2% say they're okay paying 6% or more. So we've got sellers who don't want to sell, buyers who can't afford to buy, and a market that's basically jammed. And just when you think you're starting to understand what's going on, you look at rent prices and the confusion multiplies. National rent growth is technically positive, up 1.1% for one-bedroom units and 2.3% for two-bedroom units, according to Zumper.com. But if you zoom in, the picture gets blurry. In cities like New York and San Francisco, rents are up 10 to 12% year over year. But in places like Austin, Denver, and Phoenix, they're dropping fast thanks to a flood of new construction. Apartment List reports a record high 7% vacancy rate, fueled by the biggest wave of apartment completions since the 1980s. So if you're a landlord in an overbuilt market, you're now competing hard for tenants. But if you own in supply-constrained areas like LA or DC, you may still be able to push rents higher. Meanwhile, in mid-tier markets, we're seeing real softness. Realtor.com says overall rent prices across the 50 largest metros are down 1.7% year over year. That's about $60 off peak rents since August of 2022. It's a tale of two markets, and knowing which side you're on matters a lot right now. So what does all of this mean if you're trying to invest, house hack, or just buy smart? Let's break it down. Number one, motivated sellers are back. Price cuts are at a 6-year high. In cities like Dallas, Oakland, and Jacksonville, prices are already falling. If you're patient and you know your numbers, this could be your chance to negotiate favorable terms. Maybe even get closing cost credits or seller financing deals. Number two, be surgical with your rental purchases. You can't just buy anywhere and expect 10% rent hikes anymore. You need to look at supply pipelines, local vacancy rates, and rent control laws, or you might get caught holding an underperforming asset. Number three, don't count on interest rate relief anytime soon. The 30-year mortgage rate hasn't dropped below 6% since 2022, and most analysts don't expect major movement in 2025. That means creative financing like subject to, seller carrybacks, FHA house hacks are going to be critical tools in this environment. The market definitely feels strange right now, because it is. We've never seen this combination before. Inventory is up, but sellers are holding out for higher offers and buyers are hesitant. Rent growth is slowing, but only in certain places. And mortgage rates are still sky high with no relief in sight. But here's a thing to keep in mind. Strange markets create opportunities for the people who are paying attention. If you want to learn how to invest smart in this kind of environment, or you want access to my exclusive content and direct support, come join my free community called House Hack Mastery on School.com. It's where I share everything I've learned from building a 200+ rental unit portfolio, starting with a single house hack. And if you want to learn how you can retire from your 9-to-5 with just 5 simple rental properties, check out this video next. Just tap or click the screen, and I'll see you there.